Hello and good morning to all of you. Welcome to EduTap. Welcome to today's session. First of all, happy Independence Day. And today, I welcome you all to this session. And I also congratulate you, we can say, for this Independence Day that we are celebrating. This is a big day for all of us Indians. And like it is a congratulatory day, we can say, that we got our independence on this day. Okay. So, good morning everyone and happy Independence Day to all of you. Today we are going to discuss three very important news articles from the finance current affairs. Okay. So, first of all, the news article is regarding the RBI that has revamped the regulatory framework for the domestic money transfer services. So, there is a domestic money transfer framework we can say, and in this there is the revision that has been done by the Reserve Bank of India. So, what this revision is all about, that we are going to discuss today. Okay. The second news article is regarding the UPI transaction limit that has been like proposed to increase for the tax payment. So we will discuss that for different hits, what are the different limits. Okay. And the third news article is about the small value loans. This is a small news article, or this is a small discussion that we have to do on the small value loans for the primary urban cooperative banks. So these are the three topics that we are going to discuss today. So happy Independence Day everyone and welcome to the session. I hope everything is like visible and audible clearly. Give me a thumbs up if everything is fine, and let's move ahead with these very important news articles, and direct questions can come from these news articles in the phase 1 or the phase 2 of the examination. It is more important from the objective point of view. Okay. Now, before starting with the session, do subscribe to the YouTube channel of EduTap and join our Telegram channel. In the Telegram channel, you will get the PDF of the session, okay? So, you will get the PDF of the session in the Telegram channel, and the link for the Telegram channel is provided in the description box below. Okay, so let's start with the first news article, and that is regarding the UPI transaction limit. The Reserve Bank of India has proposed in its recent statement on developmental and regulatory policies document that was released in August 2024. So in the recent document of the statement on developmental and regulatory policies, the RBI has proposed to increase the limit for tax payments from rupees 1 lakh to rupees 5 lakh through the UPI system. Okay, so there is the requirement to increase the UPI limit or the limit for the tax payments from rupees 1 lakh to rupees 5 lakh through the UPI system. Okay, the hike in the limit will help the taxpayers to pay the higher tax liability quickly and through the UPI system, that is way faster than any other, like that is easier than any other system. The payments made via UPI usually do not attract any additional charges. This is not the case when tax payments are made via debit or and credit card. So simply the idea is that when you are making the tax payments from the debit or credit card, there can be some charges that you might have to pay, but with the UPI system there is no additional charges. Okay, now let's understand that what are the different limits for the different transactions. So simply there is the limit of 1 lakh. This is the daily limit. This is the daily limit in the UPI for the transactions. Okay, so the daily limit in the UPI is 1 lakh for your transactions, but for certain transactions such as for the education and for the hospital, like if you have to pay for the education or for the hospital bills, for that the limit has been increased, or for that the limit is 5 lakh. Okay, on the daily basis. So on the daily basis, the limit of the UPI is 1 lakh for your general transactions, but the Reserve Bank of India had hiked the limit to rupees 5 lakh for certain payments such as hospital and education institutions, as well as for your IPO, that is for initial public offering, or for your retail direct scheme. For these also the limit was hiked for the UPI, that is 5 lakh on the daily basis. Okay, for the other transactions such as the transaction through UPI for the capital markets, for the mutual fund installments, if you have to pay, or if you have to pay insurance premiums, or if you have to pay loan EMIs for the collections kind of payments, and for the insurance premiums for the foreign inward remittances, the transaction limit is up to 2 lakh. Okay, so the daily limits, remember this very clearly, that there are the different limits. First of all, the normal daily limit is 1 lakh rupees. This is the normal daily limit. Then there is the limit of 2 lakh. This is for the loan EMIs, or this is for the collections. This is for the capital market that you are the payments that you are doing for the mutual funds and such. So that limit is 2 lakh. Then there is the 5 lakh limit on the daily basis. This 5 lakh limit is for your educational and hospital bills, or for your IPOs, the initial public offering, if you are doing investment in that, as well as your retail direct scheme. So these are the limits. The normal general limit is 1 lakh on per day basis. Okay, so if you are paying to any merchant, if you are paying to your friend or such, the limit is 1 lakh per day, but 2 lakh limit is there for the collections, for the capital market payments, for the insurance, and for the foreign inward remittances. Then there is the limit of 5 lakhs. So I hope this is clear. The limits for the different categories I have shown you here. So I hope this is very much clear. Now coming to the next news article, that is regarding the domestic money transfer. Now the domestic money transfer framework, the framework for the domestic money transfer was introduced in 2011. Now the Reserve Bank of India has reviewed this framework. Now the Reserve Bank of India in 2024, the Reserve Bank of India has reviewed this framework, and we have to discuss that what is the changes that has been made. Okay, what is the review that has happened. But before that, let's understand that why this framework was brought, why there was the requirement of the domestic money transfer framework. Okay, so first of all, this framework is for the scheduled commercial banks, including the regional rural banks, the urban cooperative banks. So that means the banks for the scheduled commercial bank, RRBs, for urban cooperative banks, for all these banks, this framework is applicable. Now this framework was brought because in 2011, you can understand, in 2011, there was a large number of people that didn't have the bank accounts, or a large number of people were the migrant population. You know that from the Bihar region, the migration is happening to Delhi, or the people are going to Mumbai. From Madhya Pradesh, the people are coming to different regions, or from Jharkhand, or from even Delhi, the people are going to different segments. So the migration inside the country keeps on happening, and the people keeps on traveling from one place to another for their job purposes, right? So a large number of people, particularly the migrant population, do not have access to formal banking channels, because many of the labor class, we can say the laborers that are working in the small jobs, or the daily laborers, the casual workers that are there, they belong to a very poor household, and they also are very poor. They do not have the financial literacy, and especially we are talking about 2011. Okay, so you can understand that at that time, the migrant population, they didn't have the formal banking channels or they didn't have the proof of identity or address as such. So now if they want to transfer the money to their parents, let's say I am living in Delhi, I am from a very poor background, and I do not have any formal banking account or such, okay, and I am living in Delhi, I belong from Madhya Pradesh, okay. So now I want to send the money to my parents in Madhya Pradesh, but I do not have a bank account. So how I am going to send the money? Or let's say the parents, the very old parents that are living in Madhya Pradesh, they want to send the money to the child that is living in Delhi. How they are going to send it? Okay, if they do not have the bank accounts. So that's why there was a domestic money transfer framework that was made for especially these kind of people, that the small value transactions can happen easily without any bank account, or without the much requirement of the bank account, or without much requirement of the identity proof and such. Okay, so this is the basic idea. So consequently, they face difficulties in using the authorized channels for transferring the funds, and that's why the Reserve Bank of India created a domestic money transfer framework in 2011 that was to open up the formal banking channel to facilitate the fund transfer of small value subject to monthly ceilings. Of course, money laundering should not happen through this system. Okay, so very small value transactions were only allowed. So we will discuss that what is this all about and how the transactions can happen. So what happened that, let's say I have a bank account. I am living in Delhi. I have a bank account. But my parents that are living in Jharkhand, let's say, they do not have a bank account. Now I want to send the money. I want to send the money to my parents. So I'm living in Delhi, I have a bank account. I want to send the money to my parents that are living in Jharkhand, but they do not have a bank account. So here we are doing the cash payout scheme. We are talking about cash payout scheme, that the money will be transferred from my bank account and the cash will be taken out. The cash will be taken out in Jharkhand for the parents. Okay, so this is the basic idea. So here what happens that the banks are permitted to provide us the services which facilitate the transfer of funds from the accounts of their customers. So from the customer account, from the bank account, the money is being transferred, the delivery is happening, the money is being transferred, the cash is being taken out by the recipient. So money is getting transferred from the bank account of the customer, and that is taken out in the cash form by the recipients through a agent of the bank that is appointed as the business correspondent in Jharkhand. Because it's not like that a bank does not have a branch in Jharkhand or such. If we are talking about SBI, it has branches all over the country. Similarly, PNB, similarly other banks have branches all over the country, and they have the agents all over the country. Okay, so I'm sending the money from my bank account, and that is being taken out in cash form in by the business correspondents or through the ATMs in Jharkhand. So this is what is the cash payout scheme. The money is getting transferred from the bank account to the so from the accounts, the money is transferred and the delivery is happening in cash to the recipients not having the bank accounts at an ATM or through the agent and such. So what is the limit here? So the per transaction limit is 10,000 and subject to the cap of 25,000 per month. So you can understand that this is only for the small value transactions, and the per month limit is 25,000. Now coming to the cash paying, let's say there is a laborer that is working in Delhi. Now this laborer is a very young individual, let's say only 16-18 years old. So he wants to send the money to his parents that are living in Jharkhand or that are living in any particular state, let's say that are living in Uttarakhand. Okay, so now he does not have a bank account, but the parents have a bank account. The parents have a bank account. So he wants to send the money from like he is going to the bank. He is a walk-in customer, like he does not have a bank account, but he is going to any particular bank and he is saying that I want to transfer this money. So that is allowed. Okay, so presently a walk-in customer at a bank branch can remit funds up to, so the walk-in customer, that is the laborer in Delhi, is going to any particular bank, that is the walk-in, now he has become a walk-in customer. So he is going to the bank branch and he can send the funds, up to rupees 50,000 to the bank account of a beneficiary, bank account of the parents, up to the limit of 50,000 through NEFT, through the NEFT system. Okay. Now, besides, banks are also permitted to allow such customers to transfer the funds to a bank account of a beneficiary through the agents. Now, he is not going to a bank account directly, bank branch directly. He might be going to an agent of the bank. So, he can send the money through the bank correspondence, through the agents or through the ATMs, etc., up to a maximum amount of rupees 5,000 per transaction within a monthly cap of rupees 25,000. So this is the basic idea. This is known as cash paying, that you are giving cash and the cash is being transferred to the bank account of the beneficiary. So cash payout means the cash will be taken out and cash paying means cash is being paid to the bank. Okay, so this is the basic idea. Now, coming to next, there has been significant increase in the availability of banking outlets. So it's not like that we are living still in 2011. We have, like, from 2011 to 2024, if you see that we have developed so much in terms of digital transfers, in terms of the payment infrastructure. Okay, so the availability of banking outlets have developed. Payment development has happened in the payment system for funds transfer and ease in fulfilling the KYC requirements. Before, the KYC process, know your customer process, was very difficult, but now it has become very easy. Okay, and now users have multiple digital options for fund transfers. So now it has been said that we need to revamp or review this framework. So digital money transfer framework we have discussed. Now the review that has happened, that we have to discuss. So the review is regarding the cash payout service. First, we are going to discuss the cash payout service. So from the bank account, the money is being transferred and the cash is being taken out. Okay, so the remitting bank, that means the sender bank that is sending the money, shall obtain and keep a record of the name and address of the beneficiary, because from the bank account, now if you have a bank account, your information is already with the bank. Now you do not have, the bank do not have the information regarding the person that is going to remit, that is going to take the cash, that is going to take out the cash. So for the person that is going to take out the cash, regarding that person, you have to gain the information. The bank has to gain the information. Okay, so the remitting bank already has the information about the bank account. So they shall obtain and keep a record of the name and the address of the beneficiary that is going to get the cash. Okay, so that there is a proper log that is being maintained, that how the money and from where, like where the money is going. Now the next is cash paying service in the form of cash. See, when you are going to a bank and you say that, okay, I am giving the cash and send this cash to a particular like bank account. So from where the cash is going, okay, the cash, the walk-in customer, you have to get the maximum information that you can get about the walk-in customer. So the remitting banks or the sender banks or the business correspondents, we can say the agent of the bank, they require should register the remitter, that the sender, based on a verified cell phone number, because he must have a cell phone, at least he must have a mobile phone. So the remitter, that is the sender of the money, the cell phone number has to be recorded, and a self-certified officially valid document has to be taken from the remitter from the sender. Okay, every transaction by a sender shall be validated by an additional factor authentication. OTP is being sent to the cell phone of the remitter of the sender so that the cell phone number can be verified and such. Remitting banks and their business correspondents shall conform to provisions of the Income Tax Act and such. So you can read this very easy. Remitter bank shall include remitter details. So sender bank, that is sending the money, shall include the remitter details as part of the IMPS or NEFT transaction message. So whenever you are transacting or whenever you receive the money, you get a message from the bank now that you have received 10,000 rupees through NEFT, or you have received 1 lakh rupees through IMPS. So whenever you are receiving you are receiving the money, you receive a message also. So when the transaction message is being sent, the remitter information has to be sent through that transaction message also. So in the transaction message, it should be mentioned that the IMPS has happened of, let's say, 10,000 rupees, and this is sent by Raju or something. Okay, with the mobile number of this. So remitter bank shall include remitter details as part of IMPS or NEFT transaction message. The transaction message shall include an identifier to identify that fund transfer as a cash based remittance. Okay, so simply cash paying is happening, the walk-in customer is coming and saying that transfer this money to this particular account. So you have to take all the information that you can take about the sender of the money, and you have to include the information in the transaction message, so that the receiver of the money can know that from where the money has come. Got it? So this is the basic idea. Okay, this is the domestic money transfer. So the guidelines, see, before in the domestic money transfer in 2011, the card to card transfers was also included under the domestic money transfer norms. But now under the review, it has been said that the card to card transfer are excluded from the purview of the domestic money transfer framework. So before, under the domestic money transfer framework, there was the card to card transactions that were also included. But now it has been said that for card to card transactions, there is separate norms. So that separate norms have to be followed. They will not come under the framework of DMT. Okay, so this is the idea. All other instructions in the above circular dated October 5, 2011, including the limits. So the limits that I have shown you, these are the limits that were decided in 2011. So these limits are going to be applicable. Only changes that has happened or only update that has been given is this update. Is this update that is shown in blue, as well as that the card to card transfers will not be included in the DMT framework, or they will be excluded from the DMT framework. Other limits and such, the limits that I have shown you for cash payout or cash paying, the limits will be applicable as such. Okay, the circular is issued under section 18 with section 10 of the Payment and Settlement System Act. Okay, now coming to the next news article. Till now everything is clear. Card to card transfer means from the debit card, from the credit card, the transfer is happening to credit card, or from the debit card, the transfer is happening to debit card and such. So such kind of transfers have been excluded from the DMT framework. For them, there is a separate norms that follow. Okay. Yes. Okay. Coming to the last news article. So small value transactions, or small value loans, UCBs, that is the urban cooperative banks, are required to have at least 50% of their aggregate loans, of their total loans and advances comprising of small value loans. So 50% of the at least 50% of the total loans, aggregate loans and advances should be going to the small value loans. That is the basic idea. Now, what is the meaning of small value loans? For urban cooperative banks, the small value loans means the loans that is not more than 25 lakh rupees or 0.2% of the tier 1 capital. Okay, so it has been said that the urban cooperative banks should at least be giving 50% of their aggregate loans or advances for the small value loans. Small value loans means the loans that is having the value of less than 25 lakh or not more than 25 lakh. So that is small value loans means not more than 25 lakh or not more than 0.2% of the tier 1 capital. Tier 1 capital is the most liquid capital of the urban cooperative bank. That is the idea. Okay, whichever is higher. Now, whichever is higher, subject to a maximum of 1 crore per borrower. So the urban cooperative bank can give the loan subject to a maximum of 1 crore per borrower. So this is the basic idea, that small value loan is the loan that is of value not more than 25 lakh or 0.2% of the tier 1 capital, whichever is higher, subject to a maximum of 1 crore per borrower. So it can be possible, that your the limits are, there are two limits that have been said, that not more than 25 lakh or 0.2% of the tier 1 capital. Now 0.2% of tier 1 capital can be, let's say, 50 lakhs. Now it has been said whichever is higher, that is allowed for the UCB. So that means they are allowed to give 50 lakhs and it will be considered small value loan. They are able, like 0.2% of the tier 1 capital can be 90 lakhs and it will still be considered a small value loan. So that's why a subject to a maximum of 1 crore has been mentioned per borrower and it will be considered the small value loan. So small value loan means not more than 25 lakhs or 0.2% or 0.2% of their tier 1 capital, whichever is higher, that will be considered the small value by the urban cooperative bank, but it is subject to a maximum of 1 crore per borrower. So this is what the RBI has said. Okay, I will show you the final guidelines also, but this is the basic idea. Now, the target date for complying with the above requirement was March 31st, 2024, but the urban cooperative banks were not able to comply with the guidelines by this timeline. So, taking into account the representations received by the RBI citing certain difficulties that are being faced by the urban cooperative banks, it has been decided to extend the glide path to achieve the aforesaid target by 2 years. So that is by March 31st, 2025, they have to achieve at least 40% of their aggregate loans and advances should be going for the small value loans, and by March 31st, 2026, at least 50% of their aggregate loans and advances should be going for the small value loans. So this is the minimum percentage of small value loans in aggregate loans and advances, 40% by March 31st, 2025 and 50% by March 31st, 2026. So this is what RBI has said, that at least 50% of their aggregate loans and advances comprising of small value loans. They should be comprising of small value loans, that is loans of value not more than 25 lakh or 0.2% of their tier 1 capital, their liquid capital, whichever is higher, that can be considered for the small value loan, but subject to a maximum of 1 crore. So this is the complete idea. I hope this is not very complicated. This is a like one line statement that you have to remember, as well as a 2-year glide path has been given, that is March 31st, 2025, 40% by this time and 50% by March 31st, 2026. So this is all. So this is the first question. I hope you will be easily able to answer this question. Now before moving ahead, I want to show you that EduTap has created for you, like we have prepared a website for you so that you can get the information regarding the examination at one place. So if you go to edutap.co.in, you can go to this free material, you can go to the blog section, and at the end of the page, you can get topic wise information about the exam. So let's say you want to get exam information about a particular examination. So let's say any particular examination, let's say NABARD, RBI, SEBI. So if you want to get the information about RBI, you can get it here and you can read the information about the syllabus of different components and such. If you want to know about the strategy for the examination, you can know from here that what is the strategy for the particular exams. Even if you want to know about the success stories, you can know about the, like you can read the success stories to know the strategy from where you have like how they have achieved their dreams. Okay, now this is the complete idea. If you want to know about the courses, you can go to the courses section and you can understand about the like who is teaching and what is the course that is being provided to you, what all you will be getting in a particular course. So this is the website. Do go through it if you want to know about EduTap or about the particular exam. Okay, any confusion, anyone? Okay, so this is the first question. I hope this is clear. Sorry. So this is the first question. I hope you will be able to answer. And this is the second question. Kindly read it. And this is a homework question. Kindly try to answer this. Yes, Priyanka, if you have less time, you can cover 4 months of the RBI website. Okay, at least try to cover 3 to 4 months. Phase 2 revision sessions, they will start, like they are going to start after 15th. The plan has been made. This will be shown to you. Okay, so this is the second question and this is the third question. I hope this is very easy for you to answer now. So these are the 3 news articles that we have done and these are the 3 questions. Do answer the homework, like do answers the homework question, and if you have any query you can write down in the comment section also. Thank you very much for joining this session, everyone. Thank you, everyone. Thank you for joining. Yes. Okay, thank you everyone and happy Independence Day again. Like enjoy your day. It is like a holiday, and but keep on studying also. Because the examinations are just around the corner, so you cannot relax now. So keep on studying and do the hard work. Okay, you're most welcome, everyone. Thank you so much for joining the session. Do tell me in the comment section